Hello and welcome to this week's Rupee Rakshak weekly market update. I have with me our experts Mohan and Srividya to break down the top news this week. So before we start, Srividya, could you just run us through what happened in the market this week? How did the Nifty and Bank Nifty moved?
Thank you, Bijesh. Let's review the markets for this week and discuss what to expect for the upcoming week.
Starting with Nifty 50, it opened at 22,857, down by 117 points or minus 0.51%. Currently, Nifty is 3,450 points below its record high of 26,277. The index has shown flat performance this week, while the mid-cap and small-cap have gained 2% nearly, marking their best week since early December 2024. On the sectoral front, the Nifty FMCG index remains under pressure, experiencing its longest losing streak ever at 14 consecutive days, resulting in a loss of up to 3 lakh crore in market capitalization. Today, the key stocks in focus include NTPC Green Energy, Vedanta, Tata Steel, and Kotak Mahindra Bank, among others. The market breadth currently favors declines, with 1,539 stocks falling on the NSE compared to 1,174 advancing. Now turning to the global outlook, all Asian markets are trading higher, reflecting some positive momentum despite mixed signals from the Wall Street. In terms of economic indicators, the HSBC Flash India Composite Output Index has expanded to 60.6 in February, a notable increase from 57.7 in January. This index reflects strong growth in both manufacturing as well as services sector. Importantly, the service sector index rose to 61.1, the highest since March 2024, while the flash manufacturing PMI slipped to 57.1. The latest data indicates record high job creation in February with strong sales growth leading to increased hiring. Overall, we have a mix of positive economic signals and cautious market movements. Let's look forward to further discussions on these developments.
Thanks a lot, Srividya. Mohan, a lot happened this week globally and in the Indian economy. From the tariff wars and the geopolitical tensions and also the rate cut that happened last week. Every investor has this question: when is this market recovering?
Okay, that's the question we would want to address every week, Bijesh, because people are concerned. Yeah. Probably there is no straightforward answer to that. I cannot give a date and time. This is the day. Like, on March 15th at 2:15, you will see the all-time high in the Nifty. That is something that it is impossible. Maybe you should go to astrologers, and if you have a great belief, and if they really can read the planetary positions, probably, and for whole of India they have to read the planetary positions. So it is impossible to predict the market levels perfectly. Let me look at the Indian level first. What is the reason for the market to go down in the last 4 months? It's a great saying in the financial world that price is the slave of earnings. So if the earnings growth of the companies, that is corporate earnings, is continuously stable and it is increasing, let's say for HDFC Bank keeps on giving every quarter on quarter 15% kind of a growth or 20% kind of a growth, then market or the stock price of HDFC Bank will keep on growing. And even if it comes down to from 15% to 10% in one quarter, then there is a dip. So the price is always the slave of the earnings in the long term. So it has to be following the corporate earnings. The stock market's growth is dependent on corporate earnings. And if you see last 2 quarters, the corporate earnings in India is sluggish and there is no growth. And I'm not saying negative growth. There is no further enhancement in the growth, and also particularly in the banking sector. So banking sector is really in trouble in terms of where the growth is hitting, particularly because of the credit. Why I am particularly talking about banking is reflection of the whole economy, whether it is auto sector, whether it is power, whether it is telecom. So every other sector is indicated by the growth in banking. If banking is doing well, that means the every sector is doing well, because that's the finance, the blood of business is finance. So banking sector credit growth is not come back in the last 6 months, and there is a problem there. Expected that credit growth will increase with the intervention of the central government, the finance minister coming out with a very effective measure of removing the tax up to 12 lakhs and then cutting the rates. For the first time in last 5 years, we saw rate cut that happened. So there are good things that are happening, but that to transform into real time. Now the rate cut happens from RBI, but it is not getting transformed in the real reduction in your loan rates. Now add to this problem the global geopolitical tensions. So there was election in US, and then came Mr. Donald Trump as president, and then all the tariff cuts and the tensions between US, Ukraine, the gold prices soaring to all-time high, and there is uncertainty for businesses, particularly the multinational businesses, because there is a huge interconnectedness of the businesses and the economies in today's world, because China buys US debt, and Japan buys US debt, US imports from China, and then there is a gold price that affects where there is a Ukraine-Russia problem leading to oil price. So there is a complicated system that is working, and with the Donald Trump coming in and recently Modi's visit to US and meeting with Elon Musk and all the top leaders there, and there is some respite in terms of what can affect India. So all these things are likely to also have an effect, and that is also the reason. And FIIs, particularly the foreign institutional investors, they have been selling continuously from last 4 months. And the good thing that if not for the retail investors, the kind of supply liquidity that is coming in Indian market through direct equity, through equity mutual funds, every month there are 35 to 40,000 crore coming in only SIPs. And the investors in India have been very, very intelligent and smart to buy the dip. And there is substantial amount of compensation happening for FII sales from the domestic market. So this is keeping the markets at bay. Otherwise, we could have seen 19,000 level if not for the influx of money from the Indian retail market and the domestic institutional investors, which is again money from the Indian retailers. So what I am trying to say is there are problems at the global level and there are problems at the local level. So there are these concerns. So what we expect is from our research team, that what we are looking at, because we have substantial amounts of clients' money that we manage as a financial advisory, and we continuously keep watching what is likely to be the market levels in the coming months, and accordingly we make changes in the portfolio. So to make those changes, it is important for us to keep watching what the market levels are. Like you are asking the concern for the investor whether the market level will come back, and we have a job to do to appreciate the clients' money, to give good returns to clients. That's why they trust us and take our advice in terms of where to invest the money. So what our research says is that today the corporate earnings, for it to come back, it may take another quarter. So Jan, Feb, March is likely to be, this quarter is likely to be very big, and some more should come in the April, May, June, because you will start seeing from April, May, all these policy decisions that are taken, all these things will come into effect from April. The new tax rules, the capital gains, everything will come, and that is likely to start impacting the businesses, and we should expect by the first half of the new financial year, that is 25-26, that the real bull market should come back, and till such time it is important to be patient. So you should not be worried because you are coming to an equity market, and if people have already invested from last 2-3 years, they are not in negative returns. So people who have come in only from 6 months back, they are the ones who are affected. So if you are investor in the stock market from last 3 years, you are still enjoying more than 17-18% kind of a CAGR. The investors who have concern about the stock market fall, this is continuously happening for the 5th month, and please know that the more deeper the market falls, more quicker will be the comeback.
Mohan, if somebody comes to you and says he has a capital of 1.5 lakhs, or 10 to 15,000 per month to invest. So, considering the current situation of the market, what will be your advice?
See, what happens is if you have 5-10,000 rupees, especially talking about the SIPs, the last 4 months, if we look at the mutual fund SIP data, the exits that have happened, there has been more than 30% of the SIPs cancelled, and people have stopped their SIP contribution because the moment they see their app, the whichever app they are using for mutual fund, wherever they invested, they see the negative returns, they are stopping the SIP. Which is the worst thing to do. And SIPs has actually give you higher return when market is falling. And you should not stop the SIP first. Now, if you have 5-10,000 rupees, the general rule is don't even think, because this is for a long term. Why do you invest in a mutual fund? You invest for your children education, you invest for creating corpus for your retirement, corpus for your travel, whatever the goals that you have in life. To achieve that fund size is why you are doing an SIP. In fact, in our portal, if you go to rupeerakshak.com, we have created exclusive section for people who are small time investors. It is not about how much you invest, it's about where you invest. And what is the right instrument. Now, for that we have created this, there is a page in the portal called Smart Invest, that is meant for small time investors, the retail investors, wherever they have 1 lakh, 2 lakh rupees. So, smart investing is not putting all your money in the FD or all your money in the stock market. So, people are always in two extremes. Either they are too aggressive and they want to make quick money. Today I will put money and next week I have to make 5%. There are people who quit job, IT employees, and they think I will put 10 lakh rupees and every month I will make 1 lakh rupees. Why the hell should I work for this kind of a pressure and all I should take? It's not possible. You can't make that kind of a money. We will give you option to invest in multiple asset class. You should invest in stock market if you are a new person through mutual fund route. And if you want to have some learning and understanding, then you should actually buy in direct stocks. Now, you don't know which stock to buy. So, there are portfolios, stock portfolios, already curated portfolios with 1 month, 3 months, 6 months, 1 year, 3 year, 5 year kind of a return. So, you should do your own learning and understanding and start investing little bit in equity, little bit in mutual funds, little bit in bonds also. The cost of investing in this multi-asset is also lowest in the industry. So, there are plans like bronze plan. You can subscribe to the bronze plan and get access to 3 baskets. You can buy one SIP, you can start with retire in 10 years, baskets like self-reliant women, baskets like children education fund. So, you just go choose that fund, children education fund, and start doing 5,000 rupees. For like that, you get 3 baskets for just 999 rupees plus GST. If you want more baskets, for 5 baskets it costs 1,500 rupees. For 10 baskets it costs 2,500 rupees. And this is for the year. And also, if you keep following these market updates, what's happening and why your money is going up or going down, it will also give you that sense of security that somebody is managing my money. So, smart investment is also being with the expert. So, with years of research that we have done and having managed hundreds of crores of people and over last 10-15 years, that kind of experience really matters. Today, you don't get worried about the market, what is happening, just stay invested, but do the right allocation. And our experts are available. If they register on rupeerakshak.com, and our team will call them and understand the requirement and advise them correctly.
That was for people with small money. Now, if we talk about somebody with a bigger capital, around 30 lakhs, 40 lakhs, so do you have anything for them?
According to us, high net worth individual, anybody who has at least 30 lakhs or more than that as a lump sum investment, we categorize them as HNI investors, high net worth individuals. So, if you go to rupeerakshak.com and browse through and explore more on this HNI portfolio, you will see that there are 3 options. This is a risk return based portfolio. So there is a conservative portfolio where we'll guarantee the capital, also guarantee the interest or the fixed interest. It's invested only in fixed interest investments. So if you have 3 crores, you can get 2 lakhs every month, and you can just subscribe to this conservative portfolio and exit all your FDs, or if you have a real estate property, exit that and put it and get 2 lakhs every month. So we allocate this money of 30 lakhs or 1 crore or 3 crores based on what returns and what risk combination that you choose. If you choose an absolutely safe one, then you can expect about 8.5% kind of a return and a liquidity of 0.5% per month on your total investment. So on a 3 crore, you can expect a 2 lakh rupees cash flow. Now the second option is moderate portfolio. When I say moderate portfolio, we give little bit exposure, anywhere about 11 to 12% we try to achieve the returns with 40 to 50% exposure in equity or equity linked instruments. Yeah. So this is a portfolio advisory, not portfolio management. A portfolio advisory is always an advisor who does that according to your risk return and changing risk return. And all this is available in the platform. It is all done in your own account. From your bank account, it goes to investments. It is just the system captures all the transactions as per the advice of the advisor. So as per the requirement of you, these things are set up. Same way, people who are very aggressive, for them we have a plan of 15% plus risk return plan, that is called an aggressive plan. So where we give almost 80-85% kind of an exposure to equity, and depending on how aggressive, you can give exposure to sector funds and short term funds and all such kind of a things. So that is possible for HNI portfolio. So if you have 30 lakhs, I would recommend that if you are not coming to this HNI portfolio of Rupee Rakshak, also what you should do is you should keep on investing in 5 to 6 tranches. You should not keep waiting that the markets will come back. You never know when it will come back. So if you have a lump sum amount, if you want to invest in stock market, you should keep doing it 20% in 5 tranches. Every time now you start, and if it does not come also, every week you start putting, every time the market starts falling, and when it starts rising, put the entire amount. So it's important to have a financial expert and be with them, choose the right expert and be with them and follow the advice for a large sum. And right now for 30 lakhs, I would suggest if you want to invest in equity, you stagger your investments and get into the market in 4-5 intervals.
So since the Trump government has come in, we have seen US market hitting the all-time high. Is it a good time for Indians or NRIs to invest in the US market? If yes, what is the safest way to get into it?
That's a very interesting question, Vijesh. And investing in global assets, basically for high value investors. I'm not suggesting this for small investors. Of course, there are so many platforms today offering US stocks, and every finance apps have the US market data also, stocks including cryptocurrencies and all that. Just to bring your attention, if you have you heard of this Parag Parekh Flexi Cap Fund? So this is one of the top performing fund. Even today, when the markets are down, mid cap down by 20-25%, small cap down by close to 30%, even in such a situation, this Parag Parekh fund has a positive return. Now, because US market is at all-time high, it's only the mutual fund which is giving positive returns when everything else is down, because not because of Indian markets, it's because of exposure to US. So learning from this, if you are a big investor, you must have some exposure, not saying big exposure, some exposure, some amount of money in your portfolio should be in dollar currency. Because when you invest in dollar currency, there are 2 advantages. One, appreciation. Whatever, if you buy $10,000 worth of stocks and it goes to $15,000, so you have a $5,000 appreciation. Beyond that, there is also a currency appreciation. So you bought it at 84 INR and it has become a dollar at 87 now. So there is a currency appreciation of 4 to 5%, which anyway happens year on year basis. But at certain times like this, where there are geopolitical tensions and there are so many other things that are happening, gold prices go up and the currency difference also is very, very huge, which is an advantage to you. So what I'm trying to say is, it is important to have, if you are a big investor, if you have a portfolio of like 2 crores, 3 crores investments in cash or financial assets, so then you should have some exposure to US products. And it is not easy to actually get in and understand all that. So what we have done is, as a advisory house, we have a global research desk, and we have created a global portfolios also. If you go to rupeerakshak.com, there is a portfolio called NRI portfolio. So if you explore that, we have given all the top performing global assets. So there are products which have done 34% CAGR in last 4 years. I'm not talking about just last 3 months of market high. I'm talking about last 4 years investment product, not buying one Alphabet or not buying Facebook stock or Google stock. I'm talking about a fund which has delivered 34% CAGR on a dollar denomination. So such interesting products are there, you should explore. When you are investing, there are tax challenges, there are regulatory challenges. All these things also we help with our empaneled tax experts and regulatory experts. So we in fact do a weekly webinar. For those interested in investing in US, we will tell them as whether they are Indians or NRIs. We have also tied up with a global asset advisory platform in Singapore, and we open clients' account with that platform, so that they have total control and transparency in terms of how the taxes are managed and how the regulation is compliant. So these things we address in the webinar. So there is a limitation how much money can you put it into the same mutual fund. It's already growing in leaps and bounds. And if you are in control, if you are directly investing into US stocks or to the ETFs, there are plenty of ETFs. You have everything, exchange traded funds are there for commodity, currency, interest rate, you name it, you have it. So it is a very complicated world with thousands of ETFs from hundreds of hedge funds. Based on that, we suggest how much exposure should be for US stocks, how much should be for debt. In fact, there are very good debt products which will give you 4.5–5% kind of an yield on a dollar. Adding to you the rupee side. So if you are going to use money outside India, then you very well can use that money outside. So it is important that people get exposed to this kind of diversified investments with global assets, including India. But it is important to have some amount of money in dollar. And today, especially the big investors, they also go travel, vacation, and every time they pay for the currency exchange. So it also makes sense that you will reduce your expenses if you have money available in your dollar currency.
So if you want to explore any of these products, do check out our website, rupeerakshak.com, and also you can call us. We'll have all the links in the description. So that's it for today. We'll be back next week with more news and more analysis. Till then, take good care of yourself and happy investing.